All right, welcome back, everybody, to another episode of Acquisitions Anonymous. I'm Mills Snell, one of your co-hosts, joined by Bill D'Alessandro and Michael Girdley. Acquisitions Anonymous is we quickly became somehow the number one podcast on M&A because there are not that many, and we talk about small businesses for sale. We're usually joined by a guest, and we have an awesome guest today, Xavier Helgesen from Enduring Ventures. That I'll let Xavier kind of just describe you guys' holding company structure and the way that you approach things, but we're really glad you're here with us today and we have some fun deals to talk about.
Really glad to be here, Mills. Briefly on Enduring Ventures, it's a long-term holding company. We aspire to be a baby Berkshire, so we kind of uniquely do both tech and non-tech businesses. So we have which sort of plays to my background. So I founded a large e-commerce seller called Better World Books, which has a very heavy logistics component to it, physically shipping books all over the country. And then I also founded a solar company in Africa called Zola Electric that went down the venture funded path and raised a lot of money. Serves about 1 million people in Africa with electric light. So we founded Enduring Ventures. I founded with Xavier Helgesen about 2.5 years ago now, and we've been pretty active. We've done 10 acquisitions and started 2 companies out of it.
That's awesome. So, whenever my ears kind of perk up, right, when somebody says, I want to start a long-term holding company, because a lot of times people say that and they don't necessarily have a critical mass, right? It's not a holding company. It's just like, I'm looking to do my first deal and I want to start a long-term holdco. And you guys are actually doing it and have done it for a number of years. So I'm really glad you're here today and excited to have your insights. Before we get into our deals, Michael's got a word from our sponsors in our ever never-ending quest to break even on the podcast.
Yeah, we could do it. We're going to make it. Yeah, so first sponsor this week is SM Bash. So we've talked about this event for the past couple of episodes, but it is a niche event for small business M&A, so search funders and small business operators, buyers, and that sort of thing. So and actually the 3 of us, Xavier, are going to be speakers on both days, Friday and Saturday. Friday is about finding deals, and Saturday is about operating the deals. So Bill is giving a talk on Saturday. I'm giving a talk about hiring on Saturday, and then we're recording an episode on Friday. So it's February 3rd through the 6th in Orlando. Tickets are pretty reasonable, and it's going to be nice and intimate and fun. So definitely thank you to these guys for sponsoring, and encourage everybody to give the show a chance. I think it'll be pretty cool.
Looks
if you
great.
If you need a way to bribe your spouse to let you go, I told my wife I was going. She was like, "Cool, I'm going to go to Orlando and go to Disney World with the kids. So have fun." We have 4
That's
kids.
how we should market this. This is basically Disney World for small business people.
Yeah. All right, so we have a great deal today. Bill, you're taking our first deal, right?
Yes, sir. So Girdley, please throw it up on the screen for the folks that are watching on YouTube, but I will walk you through it if you are in audio only mode. As a reminder, this podcast is on YouTube as well, and you can see our horrifying faces and Xavier's beautiful face, but the 3 of us, and also the screen share of all the sims we talk about. So the first one, this is really interesting. This is a pool construction business. This sim is from 2019. It's a company called Dolphin Pools, and they're based in Arizona, outside of Phoenix, and they build pools in your backyard. And if you're on YouTube, you can see them. They're beautiful pools, really nice. The trajectory of their sales in 2016, they did 14 million of pools. In 2017, they did 16 million of pools. In 2018, they did about 19 million of pools. And then as this went to market in mid 2019, they had done almost 11 million. So they're probably tracking for, around 20 to 21 million full year. So, really nice, stable growth. They've also shared some metrics in here about the permits in their area, which are growing, nicely at kind of single digits as far as permits in the Phoenix area for pools. It kind of shows the size of their market. They also show that the average price of one of the pools that they put in has risen from $35,000 in 2016, peaked at about $40,000 in 2018, and is at like $39,000 in 2019 as they're selling the business. Company's been around since 1984, which is pretty impressive. So really tenured. They've built over 7,500 pools in the Phoenix area, which is a lot of pools. Everybody in Phoenix has a pool if you've ever been to Phoenix. Great market for pools. They're projecting $21 million in sales for 2019 and $2.7 million of EBITDA. So, decent margins, a little north of 10%, kind of low teens margins. They're run by a tenured management team. They've got over 30 years growing Dolphin Pools. They've got reviewed financials from an accounting firm, which is not something you see very often, although you can't always trust it, but it's better than QuickBooks dump. Some great stats in here about kind of the growth opportunities. They say they want to get into, commercial pools and expand there. They want to expand their Premier series, which is their $100,000 plus pools. You recall their average pool is about $40,000. They want to do some vertical integration. They're subbing a lot of stuff out. They're saying, hey, maybe we can do some of that on our own and save the sub fee. And they say you can do better online marketing, as everybody says. And also they could buy other pool companies to roll them up. They're exploring a complete or majority sale of the business. Says management is looking for acquirer can provide capital and expertise. They don't really go into whether management's going to stick around or not. And then the rest of the deck kind of talks about, their customers. They're mostly residential. So recall they're one of their growth sectors was going into commercial. But to me, this looks like very, very stable, kind of year round, just digging holes in the ground, filling them with concrete and water, over and over again in a market where the demand for pools seems to be growing as measured by the number of permits granted in Phoenix Metro. So what do you guys think about this deal?
So are they just doing new builds only? So build design, or is there also any sort of recurring revenue that comes from this?
So my understanding is this is only build design. So essentially pure new build pools.
So no service.
Not necessarily new big build homes though, right? Like if I have a home with no pool, that's still a new pool, right?
That's still a new pool, and that's the most common situation. So there are some true new build homes where there's developers at the same time, buying a pool to sell it. But a lot of times someone buys a house, they remodel it, and then they put a pool in. And to increase the value.
That's the classic Phoenix flip. New kitchen, new pool, flip.
Yep.
Maybe a new master bath if you're lucky.
So what kind of team comes with this? That's one of the questions kind of I ask a lot of deals. What am I actually buying? Am I getting a management team? Am I getting staff here? Obviously I'm getting brand and experience in the market. What other things, Xavier, do I maybe get to see when I buy this business?
Yeah, so this one there is a team. It's a very operational team that you get with this business. It's people that really know how to execute the day-to-day building of pools and selling of pools. This is also a sales intensive business because you can imagine when you get a lead from the website, it's a long way from there to signing a $40,000 or $50,000 contract to build something in your backyard. And so that's sort of this is more sales driven than most SMBs, I would say.
Xavier, how does this business handle the actual labor component? Are they self-performing or subbing most of the labor?
It's all subbed. So yeah, there's no, the internal construction management kind of stops at, I guess you'd call it the general contractor. So they're essentially acting as a general contractor and subbing out all the plumbing and the shotcrete and everything else that needs to be done to build the pool.
You brought up a good point there. So I'm pretty sure in this market, it's pretty much all shotcrete and gunite, right? Concrete pools. It's not fiberglass liners or anything like that.
No, not for the most part. Exactly. It's a lot of shotcrete. Now the ground is very, very hard in this market. So sometimes you have to dig out rocks. So that is one thing that can slow down the process.
But in the spectrum of margins for pool construction, shotcrete and gunite, at least in my experience, is definitely where you want to be. If I looked at somebody and all they were doing was like vinyl pools, I would be very, very concerned.
We actually looked at one in the Northeast that was doing doing very, very well on the vinyl pools, but they were selling high end stuff, so it wasn't uncommon for them to have a $250,000 pool.
Wow.
Mills, why do you say that about vinyl pools as opposed to the concrete pools?
It depends a lot geographically, but price point and margin are a really big factor there. Like I think you can get a vinyl pool for, half of what their average ticket is, or maybe $20,000.
Okay.
Now there's a whole lot of things that go into it, right? Like, what's the hardscaping around it? What kind of surface is it? What type of, guts does the pool have in terms of filtration and chemicals and everything? What type of system? But typically, right, if you're dealing with a lot of shotcrete and gunite and rebar, it's going to be a premium pool, and those folks are willing to spend a little bit more money, at least in my geography in the Southeast. They're willing to spend a little bit more money, and then they're willing to spend a little bit more money on the surround, and the margin on, the tile installation could be, a really nice kind of kicker.
Yeah, that's the real key in this business I've seen. So we looked at this one, and another one was, everything around it, right? The barbecue pit and the pagoda and whatever else gets done in the backyard. All of that is usually really high margin once someone has committed to actually building the pool. And so it's trying to get that base level pool as reasonable as possible, and then building up from there.
One thing that's really, really cool about the pool business in general, is this permits that we have on the screen. So not every job that happens on a residential property is permitted. Like if you own a garage door business and you want to know your target market, you can look at how many houses are in the zip code, but you don't necessarily know how many have garages. But this tells you, right, this is how many permits were pulled for pools, and you can look at it historically. And it gives you a pretty good barometer of what the total addressable market is and what's happening to it over time. But like window installation, like there's a lot of home services, right, that you just don't pull a permit, and the permitting information isn't readily available, even if it is.
There's actually a little company in the area that does a power rankings for pool construction, and so they'll list out all the companies and how many permits they pulled this year and this month, and stack them up so everybody knows exactly how they're doing against their competition, which is pretty interesting.
What is this company's sales funnel like, Xavier? Like, how is it kind of broad based? Is it billboards? Like, what's their funnel like?
So it's surprisingly, given the overall presentation of the business, has really good internet marketing. And one of the there's a company that essentially only does one provider per market. And so for whatever reason, they had found a really good company and partnered up with them, and actually was driving basically as many leads as they could field with the service team. And actually build. So leads will come in, and then salespeople are highly incentivized to get out there on site, meet with the customer, and and basically design a pool very quickly. At least there's some software you can use to design what it's going to look like, and what things they might like to add, and what color it's going to be. And so really the funnel is primarily online. And I think that's where more and more people look if they're, it also has been around so long, that there are tons of people who refer Dolphin Pools because it's well known in the area. I would say my Lyft driver hit rate was over 50% about knowing about Dolphin Pools, and knowing that it existed.
That's a good gauge.
So Xavier, one pattern I've noticed is this sim shows there's kind of 3 pool construction companies in Phoenix that kind of matter, and then everybody else is noise. It's actually the same way here in San Antonio. Like there's 3 pool contractors that matter, and then actually they're all related. So they were like family and got in squabbles and started their own companies. But anyway, don't worry about that. But is there some dynamic of this business that causes that type of concentration, where there's just a handful of majority ones that matter per market, or is it just dumb luck that it's that way in these 2, Sunbelt cities?
I think there's a kind of few local maxima here around the size that is effective, because you can be a kind of one-man show and you can go out and sell 5 or 10 pools and essentially manage the projects yourself and, subcontract them. And, that can be a way that a guy can earn a living. So there's a long tail where there's a bunch of people doing, 5, 10, 20 pools a year, or they do it as part of a general contracting operation. And then to actually professionalize your sales, professionalize your marketing, professionalize your construction management, you need some pretty significant volume of business. You need to be essentially building 100 plus pools a year for that to make sense, because it's not a super high margin business no matter how well you run it. And so I think that's probably where these other companies sort of land, is they've made that leap over time to professionalizing those functions. And actually, number one in Phoenix is none other than Brent Beshore, known to many of us. They own Presidential Pools, which is sort of the king of the Phoenix pool market.
Yeah, so it's either if you think Brent's a good capital allocator, a great business to buy, or if you're afraid of competing with Brent, maybe this is runaway screaming. Well, Xavier, I think you might have an opinion on this. In fact,
both are true. So it's I'm both absolutely terrified of Brent, and I think that Phoenix is a wonderful bet. So we did dive in. This was fun to share this because Sieva and I did dive in and work out a deal with the owners. So I can tell you a little bit of the post-mortem and what happened. So we closed on Dolphin at the end of last year. And it has been the greatest gift we got. Was they said, hey, we really don't want to run our full earnout here. We had worked out a 2-year earnout on this business. And they said, there's a guy who's so good that we would trust him with our earnout, and we'll actually bonus him out of our earnout to come in and run this business. And so they essentially said, here's your guy with 40 years experience in the pool industry who we think is amazing and is ready to run his own show. And he'd actually looked at buying out Dolphin himself and hadn't quite been able to pull together the backers and so on to do it. So it's been a really wonderful partnership with Jeff Mano, who runs this business. And so this awesome. Has both the Phoenix wind at its back and the COVID wind at its back. So this year permits have been up 60% in the local market. Wow. So it's just we've also grown around 60%. So we're literally just keeping up with the growth in the overall market.
How did you find the deal? And could you walk us through kind of everything from your original, like, becoming aware of it, pursuing it, and then kind of getting to closing?
Well, it's really a funny story because we actually went almost to the finish line with another pool construction company. And so that was where we learned about the business, and we thought, hey, actually, if these are run well, there's some pretty good economics in this. And we got very close, and it was the owner just deciding not to sell at the end, which has happened to us a couple times actually. If somebody is at retirement, but in the end they just don't want to let it go. And so we said, okay, well, have we seen any other pool deals? And this was a brokered deal that had come to Sieva, and kind of we fished it back out and said, hey, there might be something here. And so we, as you can see, the sim was this was the sim that we got, which was about 6 months old when we got it, and they had actually beat their numbers for the year. So when we bought it, they were at, now that I think about this may actually be a year and a half old, this sim that we have, but this was the last sim that was published. And so I think they were marketing it mainly to strategic buyers, and they just couldn't quite find the right one. And so we became aware of it, and they were at 20 million in revenue and 3 in EBITDA, and, kind of had the wind at their back. And so we were, we've looked at some other construction businesses, and there's a lot of things, that aren't great about those, like long cash cycles and need for bonding and need for deep industry expertise. And pool construction, you need somebody running it who really, really, really knows what they're doing. I will say that. And Jeff has had to be very on top of his supply chain in particular and his subcontractors, because it's been a crazy market. And they need to be very customer focused because people are impatient when their backyard is dug up for 6 months plus, as you can imagine. But in general, we were able to work out a deal that got us comfortable with it, and we really liked the price point. These are $40,000 or $50,000 construction projects. Our price point average price point is now over 50. So we've been able to work up market a bit. We're also doing remodels now, which are higher margin than new construction. And we thought the most obvious thing was to get pool service in place, and we haven't done it yet. So another business we looked at, they build $1 million of pool service on January 1st every year, just auto build it. But I think the Phoenix market is so pool oriented that there's so many providers, and there's some logistics to getting around and servicing them. So it seems like it's a less valuable proposition than it was for the other one we looked at.
Yeah.
And low barrier to entry.
Yeah. Biz by Sell, which I think I'm butchering the name again for you, Mills. Like I went to go look for pool deals before this episode because I wanted to talk about one today, and it's pool route after pool route after pool route. Like there's just a red ocean going on there. So Xavier, in terms of actually precisely how did you find the deal? Was it were you guys cold calling brokers? Was it web searches? What? No,
what
was it that
this was so we had gone and talked to a lot of brokers when we started looking for transactions to do and built some relationships. And so this one originally came in through my partner. So I know that it was a broker inbound to him. So he had been sent a summary and said, "Hey, you guys might be interested in this." And I think we passed it at the first look. And then when the other pool company didn't work out, then he went back and was like, "Hey, are there any other pool companies we've seen?" And we dove a bit deeper and we called them up, and hey, they hadn't been sold yet. They were really wanted to get a deal done before the end of the year. They and I think we just really liked the founders. They were really just salt of the earth. One of them said, "I will not work a day after I sell this business. I'm going to the golf course." Like, Steve will stick around and transition, but I'm out. And I have to really respect that, to be honest.
But it sounds like also you did a great job of not buying jobs for you two guys, and that this general manager, local market CEO, it seems like the critical thing to have that happen. So you fortunately got lucky that they had an employee who was ready. What sort of things have you done to structure the deal to make it to where, him leaving doesn't become a risk for you guys in terms of making the deal work?
The main thing we've done is make his job so good that he will, at least we tried to say, this will be so lucrative for you to grow this business, and over sufficiently long period of time, that, ideally you'll love your job and you won't want to leave, until at some point he'll retire, but hopefully he's having fun. So I think the thing that we've done well is we've been, we have monthly board meetings, but we're awfully hands off. I don't think we've made a single decision for him or told him a single thing. No, you shouldn't do this. I think what we found generally is the number one way to, not buy yourself a job, which is probably the biggest danger in trying to build a conglomerate out of small businesses, is really overhire for the CEO, if anything. So Jeff was running about an $80 million P&L at a public company before he joined us. So he knew what that looked like. And so we paid up a lot more than you would just pay for a general manager. We paid for a proper CEO and basically built that into the business model. But that has worked out well.
Xavier, why did the sellers want to sell?
They were really at retirement age. They really they're 50-50, and they were working in their retirement. They weren't like, "Oh, I'm 55 and I want to retire early." They were like ready to be retired. And this was something where they couldn't quite, maybe they could have handed it over to Jeff themselves and worked this out, but I think they were ready to just take some money off the table and be done.
Yep.
So as you look back on this experience of, going to the altar with another deal, doing this deal, and then it's turned out, I think, better than you probably modeled it. It sounds like maybe even better than your optimistic case. Like what sort of one or two things do you feel like you guys really learned from this experience and this deal so far?
There's I would say three great learnings. So one is like just having the wind at your back is so helpful. And so it's really focused us on markets that are growing just organically. The market is expanding. So I've seen some great businesses in contracting markets, and you realize that it's, even if they're a great business, it's so hard to grow because there's more established companies fighting for fewer customers, whereas we're essentially just riding on the back of the growth of Phoenix, and doesn't look like that's going to slow down anytime soon. So that's one thing. I would say the second thing is that Jeff is really the model for the kind of CEO we want to seek out, to the extent that we're now trying to find Jeff Manos even before we find a deal. Because if we had been partnered with Jeff, we would have found a pool company for him to run. And that would have been, if we needed to raise money for it, it would have been the easiest raise in the world. But this company without Jeff, is not nearly as valuable. And so I think that trying to line up that CEO at the same time as you line up an acquisition is like 1 + 1 = 5.
Mm-hmm. Xavier, we've had some folks on the podcast who, have kind of gone the SBA route. They're buying one business. It's their first transaction. They're kind of scraping together, raising equity, and then signing a personal guarantee and having, kind of just traditional recourse loans. In the world of kind of this postmodern conglomerate, which I really like that term, how do you guys think about sources of capital? Is it all cash flow from operations from your existing business? Do you use a mix of, cash that accumulates and debt? Do you use third-party money? Like, how does it work for you guys, as much as you're willing to share?
Yeah, no, it's I can share most of it. So, it's a tricky thing to bootstrap, because ideally you have one really well cash flowing business, and then that just funds everything. Like Andrew Wilkinson founded Tiny because he had a agency that was spitting off cash, and he wanted to diversify into longer term, business ownership. So for us, we have done a few SBA deals. So that was part of our bargain with our initial investors was, hey, we will be willing to personally guarantee some deals to sort of bootstrap. What we've found doing it is if we're creative enough, we can actually get most deals done with some combination of debt, seller financing. We have 2 deals we've done that are 90% seller financed, which I never would have expected. We've had deals. I'm trying to think if we've closed one, but there have been a few cases where you could completely finance the deal through reasonable leverage, either because the seller wants to keep an equity stake, or they're willing to seller finance a significant part. And then of course cash flow helps. So Dolphin's a great example of one that just, it doesn't require CapEx. Girdley, you posted about this recently. Dolphin is the classic example of the low CapEx, high cash flow small business. Like we couldn't really spend CapEx on that business if we tried, other than actually the business Brent's group owns. They built a giant pool park. And that apparently does sell pools. So at some point, that may be what happens. But besides that, we find it really hard to spend CapEx on Dolphin Pools.
Have you been able to keep from having to cross collateralize your businesses? And like, when I say that, just for listeners, you have businesses maybe that have less loan to value or less leverage on the balance sheet. If you cross collateralize, it's using that, another company's balance sheet to borrow, in order to do a different transaction. Or in this case, you have several balance sheets, right?
Yeah, that's been the holy grail. So sometimes it's kind of a funny. We'll cross collateralize ourselves as guarantors before we'll cross collateralize the holding company so there's no debt on the books of the holding company, and there never will be. But there is, there's only equity at the holding company, and so then each company. The other thing that we found is that we can raise money into subsidiaries sometimes more easily than we can raise it into the holding company, because it's a sector focused investor, or an investor that likes the CEO or likes the deal. So we didn't raise any money into Dolphin Pools, but I think we pretty easily could have. And we could today. If we were selling off shares in Dolphin Pools today, I think we could find buyers for that. So we have another group that does software and marketplace, and we're talking to one investor that really likes those specific things. And when you talk about, well, Enduring Ventures has a pool construction company, they're like, I don't want to deal with that.
Yeah,
give me the software.
All right, I've continued to berate you with questions on this. So, do you guys? We have another deal. You guys want to keep talking? Is everybody okay?
I think we should keep doing this. I mean, this is interesting. I can berate Xavier with questions too on holdco structures, and I think our audience is probably into it.
All right, let's keep going on this for a few more minutes, and we'll table the other deal, the payday lender, for another day for people who are interested in that. It'll be on a future episode.
Yeah. So, Mills, can I get one in here? Pepper Xavier.
I'm sorry.
So Xavier, I'm interested. You got a pool company, you got a software company. You said there's no debt at the parent holdco level. What is at the holdco level? Do you have any shared services? Do you do any kind of bill backs, intercompany, any accounting at all? Or is the holdco just holds equity and everything runs totally on its own?
So we've been heavily inspired by Constellation Software in particular, which runs a famously small head office. Obviously, Berkshire runs a small head office. And so we have one CPA, we have one legal operations guy who basically manages deals. I actually went to law school. He doesn't have a JD, but he knows enough about the law to do docs himself, and then also manage external counsel. And then we have one kind of people and culture person. So I would say the only semi-shared service is like the shared HR, sort of both tactical HR and like strategic HR, and everything else. It's like, go find your own accountants, go find your own. If your accounting really sucks, then our guy will come in and fix it. But in general, he's more of a backstop than a front line. So he's more like at a controller level. And we also have one M&A guy. That's the other thing. So he's almost like a minority partner in some ways. Like, he takes equity in some deals when he's involved in them. And one of the cool things about the holdco structure is you can do equity on a deal by deal basis. So we have a number of people who have equity in individual companies in the structure without having the same share of equity in the holdco.
Yeah, so I've noticed. So my business, Elements Brands, also structured a holdco, but we have done it all in one entity. So we just buy all the assets in, and it's just one big thing. There are advantages to that because I can move resources back and forth without doing intercompany accounting. The downside is I don't have the flexibility that you just described, which is really interesting, of different cap tables at each company level. And it seems like you kind of have to do one or the other, or you sign up for accounting help. If you keep separate cap tables and then have a bunch of shared services, you've got your white collar information workers with like time clocks on their desk, trying to do allocation. It's kind of miserable. Is that kind of how you thought about it? You said we got to do one or the other, and you picked that side of the barbell?
I think we knew that we would have different cap tables and different, just different structures. Like, each company that we bought would be its own situation, with its own shareholders, which could include the CEO or not. It could include different lenders, et cetera. So that needs its own set of books. So I think from the beginning, it was saying, hey, we're willing to sign up for that existing overhead of more tax returns, more of everything. Honestly, we don't consolidate the books of the whole holdco that often because it's not even that useful. We eventually will, obviously you have to consolidate on a yearly basis. So we'll eventually get that engine humming really well, but it's more important that the individual companies keep their books square. So you know what's going on.
Yeah. So you kind of get to choose financing flexibility, with separate cap tables and the structure you've chosen, or a little bit more operational flexibility and the ability to flow human assets and resources in between portcos. If you try to go down the middle, you kind of end up in messy town.
Yeah, I think that's a really astute way of saying it. And because we do sometimes share humans. So we have some folks on our team we call operating partners, and they're more on a tour of duty than as like a long-term member of an individual team. So typically a specialist in something, and they'll go either. I think we have one. We have a few of equity in multiple companies where they've worked for 6 or 12 months and they've gotten the stake and then gone to the next thing. So we even have one who started a business with us after working in one of the companies, and we financed the startup. So
cool. All right, what other questions we got? Mills, got any other questions for Xavier or Michael?
How do you feel about the changes to Qsbs? And maybe we talk about what Qsbs is.
So in the category of pitchforks and torches at Congress, that's what we need to storm the Capitol on, guys. Is Qsbs? I mean, we just need to barricade the doors.
Do you want to say what it is real fast?
Yeah, sure. So Qsbs, for those who don't know, is if you invest in a C Corp or you found a C Corp and you hold the shares for 5 years, you individually can be at 0% cap gains up to either $10 million or 10x your investment, whichever is greater. So if you invest $2 million in an early stage C Corp and that grows in value, you can take 20 million out cap gains free. Now, some people might say, well, is that just making the rich richer? And the answer is, well, sometimes yes. But what it's doing is it's making small business and startup investment preferential to big business, because we can all go buy shares of Apple and Tesla and whatever else with our incremental capital. But that doesn't necessarily help the economy grow the next Apple and Tesla. And so giving preferential treatment to startup investment is something that countries all over the world do. Many do it, frankly, much better than the US. And so we're essentially sacrificing our last great startup incentive at the altar of everyone who makes over $400,000 in a year is unfathomably rich, and we should tax them as highly as humanly possible, which is where at least Congress came out on that. So the Senate, I've been telling everyone who listens.
Yeah, it's important.
Yeah, go ahead.
Yeah. I was going to add, Qsbs got killed in that bill that came out of the House, but big private equity guys carried interest did not get hurt, and their loopholes got to stay.
They're very unprotected.
If there is one rule in any new legislation, is that small business owners get it in the rear every time.
In that the truth.
Sorry, Xavier, talk about the Senate.
Yeah,
please. Sorry,
so I was going to say, so this is going to the Senate, and as anybody who follows us knows, the Senate is literally 50-50. So if only one Democratic senator, including Mark Warner, who used to be a venture capitalist and benefited from Qsbs, if any of them just stand up and say, this is bullshit, we should protect Qsbs, then that will not become law and we can keep Qsbs in the books. So because eventually someone will actually know a senator, I encourage everyone to, at the minimum, tweet at them, and at the maximum, call your local senator and say, we actually care about this. This matters to small business, and both as investors in small businesses and as owners of them. So it's my piece on that.
Xavier, maybe as a way to wrap up, will you kind of tell us what your strike zone looks like? I mean, you kind of hold assets at either end of the spectrum of the privately held universe, at least. If somebody says, hey, what type of deal should I send to you, right? Or if a broker's asking you that, how do you define your strike zone?
I define my strike zone as DMs are open, and I will give you a very quick answer. I mean, we have done as small as 600K, as big as $15 million deal size. So we're pretty omnivorous in that way. We are. Let's see, what else can I say? We are definitely actively looking. We like operational turnarounds. We don't mind those at all, as long as we can see a clear path. And sometimes, so I really love anytime a venture funded company has revenue but can't get any more venture capital. Those I really love. We did one deal, Up Council, that I wrote about, that you can You can find on my Twitter. And I would love to do more of those. What else to say about deals? We are flexible around the U.S. too, so we like to look at a lot of stuff and say, does this feel special? I guess is the best way to say it. Does it feel like a really good market, a really good team, a business we can understand, reasonable multiple on cash flow?
How do you describe what you do? Like, what's the category? Because you and I do pretty similar stuff, and I have no clue how to describe it. So how do you do it?
It's really hard at the cocktail parties, honestly. I think your Berkshire Hathaway on acid is like the best description that I've now adopted that as a description of what I do.
I deleted it. I deleted it from my profile because it doesn't work. I've tried it like 10 times, and people are like, what? Like, are you the Chili's guy? Like, that's what I get. This reaction I get.
Oh my God. Well, you pigeonholed yourself there already. So no matter what you do,
the internet did it to me.
So I say we buy and we grow beautiful businesses. Like, that's probably the simplest way I can say it. Small and beautiful businesses usually. Sometimes I use the word small, sometimes I don't, because I think business is beautiful. Like, it doesn't have to be qualified as small. And I think, like, Dolphin Pools did 20 million in revenue before we bought it. It'll do probably 30 next year. That's not that small of a business. And so I think, small is a relative term, but I think, beautiful businesses generally founded and ready for ownership transition is it's a good description.
I think that's a great place to end it. Xavier, that's a really, really fun discussion, man. I'm really glad you came on. What can our listeners do to support you? How can they follow you and stay up to date with what you're doing?
Well, you can follow me on Twitter, which I really only became a passionate user of in the past year, but has been amazing for my life. So it's at Xavier Helgesen. I'm the only Xavier Helgesen on the internet, which is really helpful. So if you it's
a valuable thing.
It really is. So Twitter, if you can spell my name, you can find me on the internet. Certainly on LinkedIn, but I loathe LinkedIn. So Twitter is a better place to find me. Let's see. Obviously, if you DM me any opportunity to talk about buying a business or recapitalizing a business, that's very exciting. Let's see. We may be looking for a CFO for one of our portfolio companies, especially if they have background in home services. If anybody meets that criteria, we'd love to talk to you. I'm also always looking for more folks who have experience running a P&L in the corporate world, 15 or 20 years, and want to go buy a business and maybe need a partner to help them find the business and finance the acquisition. Would love to talk to anybody who meets that criteria.
Those are some good leads. Thanks.
That's
Xavier,
awesome.
That's awesome.
You won the award for the most asks of any guest. So you didn't even get to the 1 minute of beatboxing I suggested in the prep meeting.
I can keep going, Girdley. I'll just hijack this.
It's all good, man.
Otherwise, I have to pay for it, like the SMB Bash guys. Like, this is the only free one I get.
It's awesome. I mean, I think my opinion about this podcast is the more helpful the three of us can be to people in your shoes who are doing cool stuff and making cool stuff happen, the better the podcast will be. So we're happy to do it.
Well, I'm grateful you guys are doing
Michael,
this.
Do we have any other sponsor announcements?
Oh, we do. We do. We got so into cross-examining Xavier that we forgot. So our other sponsor is a first-time sponsor, and believe it or not, it is my neighbor who got to know me by listening to this podcast. So his name's Charlie Perrin.
You didn't know your neighbor before the podcast?
Dude, it's a 3 million person city. I don't know everybody here.
I thought like literally like your next door neighbor.
Oh, no, like 3 blocks away. I don't know. I talk on Twitter. I don't go talk to real people. Give me a break. So anyway, he's a cool guy. He's a former CPA that worked for other people and branched out on his own a few years ago and does fully cloud-based bookkeeping. So he has cloudbookkeeping.com. His name's Charlie. Super cool guy, runs operations here, all in the US. And if you are a small business that sucks at bookkeeping, he has tons of clients just like you. And he can help you take care of that through, just a very good service from, our lunch together. And again, check out them, cloudbookkeeping.com. And his name's Charlie. So I'm super excited for them to be a sponsor today.
Thanks, Charlie. All right. So we'll wrap there. Thanks again to Cloud Bookkeeping and SM Bash and to Xavier. Really fun one. And we'll see you guys next time.
All right. Thank you, gentlemen.
Thanks, Xavier.
All right.